when your Iron Condor is bleeding money. Fixing the losing side is actually the fastest way to destroy your account. If your call wing is breached, your instinct screams to roll that side away from the price. This is a trap. Rolling a threatened side usually requires a debit. You are literally paying for the privilege of holding a losing position against a strong trend. You are increasing your risk exposure just as the market tells you you're wrong. But here is the twist that separates pros from gamblers. When the market challenges your call spread, you completely ignore it. Instead, you attack your put spread. You roll the untouched, winning side closer to the stock price. This seems passive, but it is mathematically aggressive. By rolling the untested side, you collect more credit. This additional premium widens your break-even points on the challenge side. We are using the profit from the winner to subsidize the defense of the loser. We are also cutting our net delta, neutralizing the directional pain the market is inflicting on us. However, there is a critical danger zone known as going inverted. If you roll the untested side too far, your short put strike might cross above your short call strike. While this guarantees a massive credit up front, it locks in a guaranteed loss if the stock settles between those strikes at expiration. If the move is too violent for side adjustments, your final lever is duration. Roll the entire Iron Condor out to the next monthly cycle to reset your theta and buy time for mean reversion. But remember, if you cannot roll for a net credit, the trade is dead. Close it, take the loss, and preserve your capital for the next opportunity. Trade the probability, not the hope. Class dismissed.